Welcome to the deep dive. We're here to cut through the usual noise around financial reports, get past the market buzz. Today, we're taking a really close look at Travenues Technology Ltd. You probably know them better as iXigo. Their Q1 FY26 results just came out, and honestly, they show some pretty remarkable growth. So our mission today is to really unpack the strategies, the decisions, the underlying trends that are driving this performance, especially in India's travel market, which is, incredibly dynamic.
Absolutely. And it's more than just the numbers on a spreadsheet, isn't it? What these figures really show is a company that's navigating a landscape that's changing super fast. You've got everything from like unexpected global travel snags to the absolute cutting edge of AI. So yeah, the goal isn't just to see what happened, but really dig into why it matters for where online travel in India is heading.
Okay, so let's jump right in. Those headline numbers, the ones that immediately grab your attention. iXigo really kicked off FY26 with some serious momentum. Revenue from operations Rs 314.5 crore. That's over 3 billion rupees, a massive 73% jump year over year.
Huge jump. And their GTV, the gross transaction value, basically the total value of everything they processed hit Rs, 644.7 crore. That's up 55% from last year.
Wow. And profit before tax. If we take out the one-off things.
Yeah, excluding those, it landed at Rs 28.7 crore, which is fantastic, 76% higher than Q1 last year.
Okay, and it wasn't just profit. EBITDA was strong too, right?
Definitely. Regular EBITDA saw really robust growth, up 69% to Rs 32.5 crore, and their adjusted EBITDA was also up 54%, landing at Rs 31.4 crore. These are big numbers, yes, but they tell a story.
Right. So what's the story?
Well, the company itself is calling these all-time high financials. And what it really points to pretty clearly is that they're gaining market share aggressively across all their business lines, not just one or two. It ties directly back to their core vision, being that customer-focused travel company, really empowering Indian travelers. This isn't just growth for growth's sake. It feels like a consolidation of their position in the market.
That's a strong way to put it. So how do they pull off this kind of rapid growth, especially when, like you said, there were some pretty significant headwinds in the industry? Management talks about this unique playbook. It combines being super customer-centric, smart cross-selling, having tech in their DNA, using AI for efficiency, and boosting their brand awareness. Let's maybe break down the different segments.
Yeah, that's crucial because iXigo isn't just one thing, right? They have this diversified portfolio. So the big question is, how did each part contribute? And what specific strategies were they using in each segment to get these kinds of results?
Okay, let's start with flights, because that segment really seemed to lead the growth, an 81% increase in GTV. Now, you'd think, looking at Q1 FY26, with all the issues in aviation, that would really hurt a travel company. But iXigo's flight business didn't just, tread water.
Right.
It absolutely soared. How did they manage that?
It's a great question because, yeah, Q1 was definitely challenging for airlines. Management specifically mentioned things like Operation Sindoor. Those were temporary airspace closures, security exercises in North India that messed up flight routes quite a bit. Then you had the tragic AI-171 crash, the ongoing disruptions over Pakistan and the Middle East airspace, and even Air India voluntarily cutting flights for safety checks.
Right. So a lot going on.
A lot. And what's really impressive is how iXigo used their peace of mind stack. That's their term for all the value-added services designed to, reduce traveler stress, things like their AI-boosted customer support, and they just launched new voice AI features too.
Yeah.
That tech really let them be agile, respond quickly, and they actually gained market share while all this chaos was happening.
And what's really interesting listening to them is how they pin this resilience on a few key things. One was cross-selling from their huge rail and bus user base. Makes sense. Then, strong momentum in Tier 2 and Tier 3 cities. People there see them as a trusted name, especially for budget travel. And they really pushed product-led growth, like their price lock feature. It now covers fare hikes up to 8,000 rupees for 14 days. That's pretty good. Plus things like visa rejection protection and making payments easier with no-cost EMIs and buy now, pay later options.
Exactly. And if you connect that to the bigger picture, the potential for growth in Indian air travel is just immense. Think about it, only about 4% of Indians currently fly. Compare that to over 37% in China or 85% plus in the US. It's a huge gap. And this ties right into India's airport infrastructure boom. The government's aiming for 240 airports by 2030. So iXigo is positioning itself perfectly to serve this next wave of Indian air travelers, especially those coming from the Tier 2 and 3 cities. They kind of call it their Goldilocks zone, big enough to have influence, but still nimble enough to stand out right where that new growth is happening.
Okay, switching gears to buses, also impressive growth there, GTV up 81%. But I noticed the contribution margin percentage actually went down. What's happening there?
Right. And that wasn't an oversight. It was a very deliberate strategic call. Basically, they chose to prioritize really aggressive growth over optimizing the margin right now. And the reason is only about 20%, maybe less, of bus bookings happen online today. So it's a massive, massive opportunity, kind of a greenfield. Plus, you've got this interesting supply-demand dynamic. Buses often run only 60–70% full, while trains and flights are waitlisted. And the bus fleets themselves are getting upgraded, appealing more to, say, Gen Z travelers. So they're investing now for future payoff.
And I guess the improving road infrastructure helps too. India's national highway network grew, 60% in the last decade? That makes bus travel a lot more appealing.
Definitely. And iXigo's bus platform, Abhibus, is pushing its geographic reach. It used to be mainly South and West India. Now they're moving into the North and East. They're doing that through partnerships and, again, cross-selling from their other platforms.
So what's the strategy for buses specifically?
They talk about a four-pronged approach. First is product. Things like their new IDGE platform for suppliers, bus insights, data, and a filter to find brand new buses. Second is supply. Initiatives like Abhi Assured for reliability and an advertising platform for the bus operators themselves. Third is trust, using AI in customer support and highlighting Abhibus's really high Play Store rating 4.8, which is industry leading. And fourth is utility, offering practical features like their travel guarantee. It's pretty comprehensive.
Okay, let's talk trains. That's where iXigo is really dominant, right?
Yeah.
Your train business saw a 30% rise in GTV. And get this, they've now crossed 60% market share among OTAs for train bookings. That's up from 58% just 2 quarters ago. That's huge market capture.
It really is. Even though there was some, let's say, minor volatility recently, Indian Railways made a few policy changes, adjusting timings, requiring Aadhaar linking for those Tatkal emergency tickets, changing chart preparation times. So while that caused a little bit of adjustment, the core business stayed really resilient. And actually, some of those changes arguably improved the user experience overall. It shows iXigo can adapt quickly.
And we should probably mention Zoop quickly, their train food delivery service.
Oh, yeah, Zoop. It's doing over 10,000 meal deliveries daily now. They've served over 20 lakh, that's 2 million meals in total. And iXigo just recently bought another 11% stake in Zoop, so they're integrating it even more tightly.
Okay, now this next part really grabbed my attention. AI iXigo has apparently been working on agentic AI since way back in 2017 with Tara, their travel assistant. Now for listeners, agentic AI isn't just simple automation. It's about systems that can, autonomously plan and execute complex tasks, adapting as they go. So how deep does this AI integration actually run in their business today?
It runs pretty deep. Agentic AI at iXigo is all about boosting efficiency, making things more personal, and enabling autonomy. But at scale. We're talking about everything from, real-time fare trackers and agents that predict price changes to things like autonomous web check-ins that just pop your boarding pass right into your digital wallet, no hassle. And internally, they have this thing called Project Trishul. It's their big 3-part AI-first infrastructure strategy, and that's driving major productivity gains. Think automated software testing, smart code generation, machine learning models setting prices. It's really embedded.
And that voice-led customer support you mentioned earlier, Tara Voice.
Yeah, Tara Voice. It's now handling over 60% of customer calls for flights and hotels completely end-to-end without needing a human agent. It proactively sends updates, collects feedback. It's pretty advanced.
And you won't believe this, they used AI in their marketing workflows too. For their 18th anniversary sale campaign, they cut video production costs down to just 0.1% of what it would traditionally cost.
0.1%. It's incredible, like making a Hollywood movie for pocket change. But, this raises a really important question. How do you actually measure the impact of AI? They push back against the simple metrics like, X% of our code is AI generated, because let's be honest, coding is maybe only 20–30% of what a developer actually does. A much better question, they argue, is what percentage of the entire engineering process end to end is now handled autonomously or significantly sped up by AI? Wow. And for iXigo, that number is apparently north of 40% already.
Wow, 40%.
Yeah, and it really highlights their philosophy. They're willing to absorb the learning costs now, today, to build what they call a defensible moat. Basically a long-term competitive advantage built on AI. They're playing the long game.
Right, investing for the future. Which brings us to strategic investments. This kind of growth doesn't happen for free. We've seen their spending on branding and advertising go up. Partnering with Rohit Sharma for iXigo Trains, those big IPL team sponsorships for Abhibus and Confirm K. What's the strategy behind that spend?
Well, these aren't just random splurges. They're very deliberate, long-term investments in building the brand. The aim is top-of-mind awareness, building trust, which, down the line, significantly improves conversion rates. People book with brands they know and trust. So while they have a multi-year plan, you will see quarterly bumps, like the extra spending in Q1 related to the IPL season. That's expected. But overall, their target for all marketing, branding, performance ads, customer incentives is around 3.5% of revenue, which seems pretty measured, actually.
Okay, one financial point, though. Despite EBITDA rising, the operating leverage isn't scaling, quote, even faster.
Hmm.
For listeners, that basically means their profits aren't growing quite as quickly as their revenue is growing. Why is that? What does that tell us about their strategy?
It points directly back to that strategic reinvestment we talked about. Remember, they're running a portfolio. Some businesses are mature, some are new. Some of those peace of mind features, for example, might start with lower margins deliberately to build trust and get users hooked. New ventures, like moving more into hotels, obviously need upfront investment. And of course, investing heavily in cutting-edge AI and developing new products. All of that costs money now. So that prevents you from seeing massive immediate operating leverage jump up. The key thing they emphasize is to look at the absolute EBITDA growth as a better sign of their underlying operational strength. They're building the foundation.
Got it. And just quickly on ESOP's employee stock options.
Yeah, they mentioned it's a core part of their company culture, fostering that sense of ownership. They have three main types of stock grants: time-based, success-based, linked to performance goals, and some linked to acquisitions. They project the annual cost for ESOPs to be around, or maybe a bit over, 3 crore rupees.
Okay. And just to be clear on the financials, there were a couple of one-off things affecting the numbers.
Exactly. Just for clarity, in Q1 this year, FY26, there was a loss related to an investment in FreshBus. And in Q1 last year, FY25, they had a gain from a revaluation, but also some FreshBus loss and expenses related to their IPO. So if you mentally strip those unique items out, that profit before tax growth we mentioned earlier actually looks even stronger. It jumps to 76.2%. Gives you a cleaner view of the core business performance.
Okay, stepping back from the quarterly details, what's the bigger picture here for India's travel market overall and iXigo's place in it going forward?
Well, the macro story for India is just incredibly positive for travel. India is on track to become the world's third largest economy and potentially the fourth largest domestic travel market by 2030. That's huge. You've got rising incomes per person, which is transforming the old consumer pyramid shape into more of a diamond, more people moving into the middle class. And guess what? One of the top things people choose to spend extra money on is
Travel.
exactly. Travel is a top discretionary spending choice for this growing middle class.
And the demographics you mentioned earlier are fascinating. Gen Z, the 18 to 30 crowd, their train bookings on iXigo jumped 45% year over year, and bus bookings up 56%.
Huge numbers. And it's not just young people. Solo women travelers, another really interesting trend. Their train bookings were up an incredible 123% year over year, and women made up 27% of all solo bus bookings on their platforms. These aren't just stats. They signal real shifts in who is traveling and how.
So tying it all together,
Well, you always have the seasonality in travel, right? Q1 and Q3 are typically stronger because of holidays and festivals. Q2 is usually a bit leaner. Q4 sees regional surges. That's normal. But the overriding message from iXigo and looking at these results is one of sustained momentum. They expect to keep growing faster than the overall market in the near to midterm. They seem pretty confident about the road ahead.
so we really dug deep into the Travenues Technology's Q1 FY26 results today. From that really impressive top-line growth, driven by these different travelums working together,
Yeah.
to their pretty pioneering work in agentic AI and that targeted branding. It definitely seems like iXigo is focused on long-term sustainable growth, and the market potential in India is just massive.
Absolutely. And that leaves us with a thought, maybe for you, the listener, to consider. As AI keeps changing everything, and as India's travel scene continues to boom, what are the next peace of mind solutions? What new innovations do you think will become essential for that next billion users coming online? And how will companies like iXigo need to keep adapting, keep innovating to stay ahead in such a dynamic environment?
Definitely something to think about. Until our next deep dive.